indeed, all rivers flow to the sea, yet the sea is not full. Mike Figurski is starting his visionary communication pathway, which I'm familiar with because I'm on that pathway too.
All right.
And for those of you who don't know about this pathway, the interesting thing about it is the first speech really is up to the speaker. You don't have to have any topic or theme. It's just to give a speech and to get feedback. And then the next speech will incorporate that feedback so that you can show that you've made improvements and progressed. That's what Mike is doing this morning. His speech is 4 to 6 minutes, or 5 to 7 minutes, and he will have fun.
All right.
Our next speaker is training and practicing to transition from being a defense contractor to helping working families achieve financial independence through education and financial coaching. A financial plan often requires life insurance, and he will help you see how it works as an integrated part of reaching their goals. Please help me welcome my heartthrob, Mike Figurski. The role of life insurance in building wealth.
Now, Toastmasters, fellow Toastmasters. I'm sure each of you, either now or at some time, have had a toaster on your kitchen counter. And while a normal toaster makes good toast, that's all it does, it makes toast. If it went away or stopped working, you probably wouldn't suffer any ill effects. Or if you had a much better toaster that on the 15th of every month popped out $5,000, just enough for your family's budget for the month. Would you like that toaster? I think I would. Would you want to protect it? I think I'd keep it in a lock and key, make sure nothing happened to it. Does your family depend on your income every month? Would they struggle if it went away? Doesn't it make sense to protect the possible loss of your income? Since we're talking about Benjamin Franklin, he has some things to say about life insurance. A policy of life insurance is the cheapest and safest mode of making certain provision for one's family. And it is a strange anomaly that men should be careful to insure their houses, their ships, and their merchandise, yet fail to insure their lives. While these quotes underscore the importance of life insurance in protecting a family's financial state, life insurance is part of a much broader context, that of building wealth and achieving financial independence. As we go through how this all works, I'll address 2 questions that you need to consider when thinking about life insurance. First of all, what are you protecting and how much protection do you need? How life insurance fits into this was first depicted in this graphic that appeared in Consumer Reports magazine in 1938. The concept is, early in life, that we start as working adults, we have little wealth, little savings, and most likely at some point or some point in the near future, we'll have debt. We need to buy a house, cars, raise a growing family. But as we work through life, we're able to pay down debt, which frees up money for saving and investing. And at the end of our career, at retirement, hopefully we've eliminated debt. Kids are grown, they're off on their own. There's not a lot resting on us anymore. And if we've saved along the way, we'll have a nest egg to get us through our golden years. What life insurance does in this is protect the income stream that makes this all possible. Because income is your greatest tool in building wealth and paying down debt. This is especially true if early in life there's an untimely death of a breadwinner in a family. If debts have already been incurred, you have responsibilities of children and a family, you haven't built up much wealth yet to fall back on, the loss of that income can be devastating. The debt never gets paid off, wealth doesn't get generated, and the lines never, they never converge, and in fact they may diverge. You may get more debt and even less wealth. So that answers the first question, what are we protecting? The income stream that makes getting wealthy and being out of debt possible. The second question, how much protection do you need, is as varied as the number of cases that you look at. Consider a young professional couple, no kids, load of student debt and a new mortgage. In that case, the coverage would be just enough to cover the debts so that the surviving spouse could carry on in their professional career and still achieve their goals. At the opposite end, a single breadwinner family with numerous kids, the loss of that breadwinner would be devastating. The wife would need, the coverage would be to replace the income for some number of years until the wife or the stay-at-home dad could rejoin the workforce and support the family, and also eliminate the debt so that is not being a weight on the family budget. So as many different scenarios as there are, there's some common threads that run through all of them. You're going to eliminate debt, replace income, maintain their lifestyle, and allow the continuance of the path towards financial independence. So even though there's lots of different scenarios, it all comes down to one simple thing. You need to protect your income or your plan is toast. Thank you.